All right, break time's over. Back to work. We get some more winning trades to find for tomorrow. It's been a fantastic week so far, but boy, markets are choppy. A bunch of sideways ranges right now. Now, if you know me, I love range-bound markets. I think they're the easiest types of markets to trade. I got some very easy trades I'm tracking for Wednesday. By the time we're done tonight, you'll have an easy roadmap to make some money as well. Before we jump in, though, and get our hands dirty on these charts tonight, make sure you subscribe. I don't want you to miss tomorrow night's videos. Hit that subscribe button for me. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting the channel. Enough of the introduction though, Joe. Let's get into it for tomorrow. It's been a pretty good week. I love range-bound markets like this, so been a good week in our trade room. Charts are all prepped up though for tomorrow. Where are the best trades for Wednesday? NASDAQ triple Qs are ready. S&P and the SPY is ready. Boy, you can easily see right now we are bullish on both the S&P and the NASDAQ, and we're all chopped up in trading ranges. Again, range-bound markets, they make our job so easy because ranges act like magnets and they love to rotate back and forth. Now, the 60-minute chart's a good place to start, but the biggest clues are always going to be on the tick chart. So let's go over my favorite trades here for tomorrow. We'll drill down to some tick charts here. There's no major news we're watching for tomorrow, so let's just jump right into it. As mentioned earlier, bullish into a range. The most important clues, though, are right on these tick charts. Let's drill down to our 7,000 tick chart. You'll notice this is a 7,000 tick chart linked up in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. It's one of the most important indicators we use every day. Helps us find lots of winning trades each morning in our trade room. There are really two very important clues right now on this tick chart. First one is a big move up and a strong move down. A big move up. Now, what does a big move higher tell us? Big move higher in a bull market, we do not want to buy high. What we do is we wait for a two-legged pullback, buy low, which we did yesterday, and the goal is to go back up and retest that high. So this is pretty easy. The buyers have one thing on their mind. The buyers want to go back and punch their ticket back at that high right now. That's clue number one. The second clue, or the second part of that first clue, is a strong move down. Strong move down. That move down yesterday was pretty strong. Anytime we see a strong move in one direction, we expect a pullback and a retest of that low. When you put this in combination with that big move higher, it's easy to think that there have to be a lot of buyers down there who would love to buy that retest and finish off that run back to that high. That's a huge clue in my opinion. But the most important clue is the second one, the bullish trading range. Bull market into a choppy, sloppy trading range. Now, we talk a lot about these in our free trading classes on the website. What do we know about bullish ranges? We know two things. Bull ranges, first thing is we love bear traps down below the low of that trading range. That is my favorite trade for tomorrow, and we'll talk more about there. There are three different variations of that we'll cover here in a moment. The second way you trade a bull range is a breakout pullback, right? We look for a breakout above that range, and we then use basically the prior highs as a key area of support. I like that trade a lot, and we'll talk about that. There are some variations on that because if we're lucky, we might get a big short off the top and then pick it up and buy it on that breakout pullback. So now that we know the most important clues, and I've given you a hint as far as my favorite trades for tomorrow, let's go first. I want to talk about that bear trap below that low because these types of range reversals, right? That reversal like that can be a very, very profitable trade. And again, there are a lot of ways we can structure that trade for tomorrow. Later on in the video tonight, I want to talk about breakout pullbacks because breakout pullbacks are very easy. And if you do it the right way, there's ways to make money the long side and the short side. There's also ways to lose money with breakout pullbacks too. And later on in the video, we'll talk about how to stay out of trouble on those breakout pullbacks. So let's talk first. My favorite trade, of course, is that bear trap below that low. Now, boy, as you saw today, the buyers did a great job at holding that low. We may not be able to get all the way down and take out that 37 3/4. We may only get what we call a shallow bear trap. And bottom line is, if I can get underneath this trading range, I would love to. Now, think about this, right? Think about this. It's a great place to be a buyer. But as this thing tries to go back and take out those lows, I'll bet there will be a lot of uneducated traders, a lot of rookies, inexperienced traders who will fall for that bear trap. The problem is, I don't know how far that move will go, right? It may keep on going. I don't know how far that move will go. I'm not in the business of picking the bottom of that market. Instead of guessing where it goes, what I'll do is I'm going to wait for the rookie bears, right? These have to be inexperienced traders there. Try once, try twice, and grab what we call in our free video classes a bear trap entry. These are very, very easy patterns. The key is once they pull back to that 21 EMA, remember, these are not professionals, right? These are rookie traders. Let them try once, go higher high, let them try twice. What I want to get just underneath that prior swing. In my free video classes, we talk about the proper signal candle, right? Get that nice strong green candle closing above that moving average. And remember, one great thing about range is that they love to rotate. So the amount below the range can be projected above the range. That will give us an idea. We take some profit targets off, and we know where the market wants to go, right? It wants to go back up and take out those highs. I love that bear trap, that shallow pullback bear trap. Now, another favorite of mine is a double bottom, right? Double bottom. If you watch my videos, you know how much I love double bottoms. In a strong bull market, and I see a deep, deep pullback, we oftentimes will pull up, retest that low, trap in the bears, and squeeze right back up. Double bottoms in an overall bull market. I can't say guaranteed. Nothing's guaranteed. They won't let me do that on YouTube, right? But these are almost guaranteed winners, right? About as close as you're going to get to a certainty in day trading. We have that strong move down already. We know where that double bottom wants to be already. It's right there. Remember, problem is though, but I don't know, right? As we go lower, they may go here, here, here. Again, we're not going to pick that bottom. But if they can get back down to that low here, remember, this is a great place to buy, a horrible place to be a seller. It's not a bear market. I want to look for one of these patterns right there, right? Once we pull back to the moving average, bears try once, bears try twice. Trap in those rookies, and think about this. If you are short into support and your stop loss, right? Your stop order is right there. Your stop's right there. What happens if you get stopped out? You have to buy your way out, right? That's why these reversals work so well. And again, we think about it, this range right here will want to rotate off that low and punch that ticket. This could be the biggest winner of the week, in my opinion, that double bottom reversal. Now remember, put this together with that previous trade I just talked about, right? If we can run some stops and we start cooking higher, what do you do? What do you do? What do you buy on a shallow pullback? It's a trap, right? It's a bear trap. It's always going to be a bear trap. This is a trade we look for. I will take this trade every time I see it. Every time I see it, right? Double bottom reversal in an overall bull market. Trap those bears in. 1, 2, because again, it may keep on going lower. Trap the bears in. Use their stops. Again, if you get stopped out when you're short, you buy your way out. Stops fuel to move higher. And as you go higher, it's a higher high in price and right below that low. Why? Because we want to buy low. We don't chase the market higher. That's a rookie mistake, right? Once those rookies get stopped out, we'll be getting in with that bear trap, going higher. And remember, leave that runner, right? Leave that runner back up to retest the high. Now, here's one variation. Okay, very, very important. I love that double bottom reversal. But you know what? Sometimes we don't get it. Sometimes we don't get it. Sometimes it runs lower, and there's so many buyers down here, it goes boing, right back up into that trading range. I know. It's not my favorite trade in the world, but if that happens, all right, if that happens, what's the problem? What's the problem? If that happens, we don't want to buy what? We don't want to buy high. So if it bounces hard and runs right back up, starts grinding higher, what do? You look for that bear trap. All right, look for that bear trap below that low. Okay, again, I want that two-try failure. I want to trap in those bears right there. But if all we get is a V bottom, which could easily happen with all the bulls in the market right now, get that higher high in price and get in on that bear trap. All right, I know you guys love those bear traps. I get so many emails this week, people making money with these. But listen, let's slow down for a second, because if you're watching for the first time right now, this could be brand new to you. I know most of you guys know these pattern setups because you've learned them already in these videos and our free video classes, but this might be a brand new language for you. Traps, double bottom reversals, range, rotation. I'll tell you right now, the minute you learn to trade ranges is the minute you become almost unstoppable as a trader. So I teach all of this, right? Because this might be all brand new to you. I teach all of this in our free video classes. I have hundreds of examples of range rotations, range reversals, double bottoms, bear traps. Not to worry, I'll put a link up here for you. Upper right-hand corner, hit that link that popped up there. Grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will show you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day, the locations. Then once we know the best location, we time the perfect entry with things like traps, failure patterns, pullback combinations. It's your 4 favorite patterns there. Help kickstart you making money. Bottom line is, the markets are way too good right now not to be making consistent money. If you're missing the good trades each day, if you're tired of taking losses, hit that link up there, take that free course. It'll give you an easy roadmap, keep you focused on where the best trades are going to be each day. And also, keep in mind too, if you can't grab the link up there, I'll put all the important links in the description of the YouTube video. I'll put my free class links down there. We trade together every morning in our trade room. I'll put our trade room membership links down there. I'm on Twitter as well. I post a lot of stuff on Twitter in between these YouTube videos. If you're on Twitter, give me a follow. I'll put the details in the description there as well. All right, so now you know where to get more information and learn more of the fine details. I can't teach everything, of course, on these videos. So now we know, right? Now we know the way to profit on that range reversal, which is always my favorite way to trade a bullish trading range like this. But now here's the big question. Now the big question is the breakout pullback. If we play our cards right on this, if we do this correctly, there's money to make on the way up, money to make on the way down, and money to make on the way back up. Let's talk about that right now on the NASDAQ. NASDAQ, I know, is lonely over here. It's been a while since I've talked about the NASDAQ here. The NASDAQ is very similar to the S&P. It almost always is, right? And a couple times a year it isn't. We're bullish on the NASDAQ into a choppy range. It makes sense why the NASDAQ is so grumpy right now, because you can see, right, it's going to bumping right into overhead resistance. Would you want to buy up here? Would you want to buy? No, right? Of course not. Everybody wants to buy nice and low right now. The real clues, obviously, again, always, right? They're not in the 60-minute chart. The 60-minute chart's great for direction, right? It tells me, okay, focus on the long side. Now let's go to the tick charts. The money is made on the tick charts. This, of course, is a 4,000 tick chart, upper left-hand corner, and I did highlight some beautiful examples. We'll talk about this as we go deeper into the lesson. You guys are in for a treat on this NASDAQ chart. This is a pretty choppy market, right? You can definitely see this is not for the faint of heart, right? This is a chart only a mother would love, as they say. I'm kidding with you. There are 3 important clues on this chart right now. Take some notes on this. This is a masterclass on technical analysis right now. 3 important clues. First important clue, strong move down. Now remember, we're not a bear market, right? We're an overall bull market. Do not let this chart fool you. We're not bearish overall. Okay, that's the 60 minutes job. On the tick charts here, strong run down. What does a strong run down tell us to do? Well, expect what? A pullback and a retest of that low. Oh my goodness, right? The bears, they gave it everything they could. They threw the kitchen freaking sink at this thing today, and they still couldn't take out that low. Now, don't count the bears out, right? Don't count the bears out yet. We'll talk about why I say that in a moment, right? But we know where the bears are trying to go. We know why the market tried to go in lower. If you watched last night's video, you knew why this is going on. Anyways, strong move down, big important clue. Now let's talk about what I think are really interesting clues. Bullish range, bullish range bull market into a range. What does that tell us to do? What do bull ranges do? They fake out breakout, they reverse off that low, and what do? They pendulum swing. The amount below the range gets projected up top here, right? It's easy to see right now. The buyers want to take out that area right there, 17,856. Obviously, take the high out too, but the goal is with a bullish trading range, right? The goal is to rotate off of that low, right? Take out these big highs and take out that pendulum swing up overhead. Now we have the curveball. All right, kids? Now we have the curveball. The third clue is a bearish range. A what? Yeah, a bearish range. Look at it. Bear market down into a trading range. Okay, now pay attention because this, I believe, I think this is the most important clue for tomorrow as far as timing the entries go. Now, what do ranges do? Ranges rotate. They rotate back and forth. So as we go lower, right? As we go lower and we start to rotate higher now, where do the bulls want to go? They want to rotate up off of that low. Now think about this in context, right? Put this range right here in combination with that previous range. What do we know about range breakouts? Range breakouts, they love to rotate, break out, and what? And pull back right into, again, what was resistance, what was a high, becomes a support level. This in my eyes, is the sweet spot for the NASDAQ. It's almost identical to the S&P as well. The S&P, again, wants to go up and pull back to its trading range. But I love, and this is not easy. It's messy. This is pretty advanced right now. That's why I'm happy I get a chance to teach this to you guys, because this is not easy, right? If you understand this stuff, you are so far ahead of every other trader. It's just a matter of time before you put all the pieces together. So give yourself a pat in the back if this is all making sense. I think this is a great trade for tomorrow as well, because what it does is it basically blends it all together, right? We have that bull range up here. We know this range up here will try to rotate higher, right? We got the short-term range right there, that bearish range. We know that one will break out or try to break out. And again, we'll try to get that breakout pullback as we go. All right. Now that we know those three clues, let's try to make some money with all this information, right? Because it's one thing to know what's going on, but it's a whole other thing to structure some trades, right? And risk small, earn large, and make some money off this. Now, most important thing right now is pretty much everything we talked about before in the S&P applies on the NASDAQ. So I mentioned earlier that strong run down, they want to retest that low. Do you see this beautiful bear trap right there? Right? Do you see that beautiful bear trap? Notice I go lower, right? Bears start trying, the bears are trying. They get right below that low, and then look. Everyone buys the you-know-what out of it right there, right? That's a beautiful bear trap. Okay, back on the S&P, right? Back on the S&P, real quickly, Back on the S&P, this is that move down, right? Bears once, bears twice, and that bear trap. On the NASDAQ, it went 3 times. It doesn't matter, right? 1, 2, it doesn't matter. I want to buy as low as I can. That same pattern we talked about a moment ago on the S&P is exactly what we're seeing right now here on the NASDAQ, right? That is that pattern right there, right? It's simply a move lower. The bears are trying. This is a horrible place to be a seller. Right? It's a horrible place to be a seller. They're trying to short that low, to try to take out that low, right? That is your bear trap and a gorgeous example of that, okay? Now, at the same time, we now are rotating higher. What's the entry pattern we use as we rotate higher? We want to buy as low as we can. How do we do that? There's that bear trap setting up once again, right? We mentioned earlier, we go lower, we bear trap in. If we punch up, what do? We buy bear traps. We don't chase it running higher. That's that bear trap we mentioned before on the S&P, all right? So a beautiful bear trap area with the right signal below that 99.25. Now, I mentioned earlier, don't count those bears out, right? Don't count those bears out, because right here is a breakout pullback zone. Remember, whenever we have a trading range and we break out of a range, we like to come back, in this case, use that area as resistance and run lower. So don't count those bears out. They still have unfinished business, right? The bears have unfinished business back to retest that low. I don't think anybody should be surprised if we hit this 670, this 60-70 area, 682 area, we may run up and just whack right back down to that low. What do we do down there? Do we sell down there? No, we're not a bear market. If this thing goes higher and whacks back down to that low, what do? You trap those rookies in, right? Let them try once, let them try twice. This is that double bottom, right? My favorite trade for tomorrow, my double bottom reversal. We mentioned this a moment ago on the S&P. If the bears punch their ticket back and take out that low, remember, I don't know how far it will go. It may keep on going lower. I don't know, right? It may go all the way down to these levels below. But one thing I will tell you, though, is if it does, I will look for those rookies to come in, chase this thing lower, right? It'll run lower. Inexperienced traders, like back here, right? Inexperienced traders will go, oh, it's a strong run down. I'm going to sell, and they get smoked, right? And that's exactly what we're going to do over here. So again, it could be here. It could be here. I don't know. All I do know, though, is once this thing pulls back to that 21 EMA, now it's one try for the bears, two try. Why two tries? I need their stops. Right? I need that fuel, right? I need that stop loss run to get fuel going on the way higher, right? And once it pops on that two try failure, as it pops, you know better. Don't chase that thing. Do not chase that thing. Go in and buy as low as you can. And it might require you to wait, right? It may mean waiting for a little bit. That's okay. I don't want to buy high. If I buy high, by the time I get stopped out on that short pullback, all the professionals are getting in. So again, a quick recap on what we talked about before on the S&P. The NASDAQ is still very much in the same game plan. Don't count those bears out. Now let's talk about the move going higher. All right, and again, this will all apply to the S&P as well. Now, again, with this range right here, we should be rotating, right? The most important thing about range is they love to rotate back and forth. Okay, so we know where the market wants to go. It wants to take out these highs overhead. Now, a couple things. If we rip, right? If this market just starts to rip and run higher, what is my challenge? I do not want to buy high. I want to buy low. How do you buy low? You buy low with bear traps. You get that higher high in price. It will usually be a little bit above the moving average like that, right? Like over here, right? It'll be a strong run up. See that right there? Higher high in price. See how it goes just a little bit below that low right there, right? See that little higher high right there, and that little buy right there? That's the pattern. Okay, that's the pattern. This is what you want to look for whenever you're in a bull market. We're rotating back up again, higher high in price. It'd be a little bit above that moving average, and then we'll go right below that low, right? Just like we see over here, all right? So that's what we do if the price begins to rip and go higher, all right? Now, at some point, if this thing keeps on going, I don't want to what? I don't want to buy high up here. Okay, rookies buy high. Inexperienced traders buy high. You are not a rookie trader by watching this video. You know too much now. We don't want to buy high. We want to buy low. Now, this is where that new range, this is where that range comes in handy. I would just love, if there is a trading god watching down on us tomorrow, right? Please give me that double bottom reversal or give me that pop up, that pull back. And I love the idea of using that most recent range as a breakout pullback, which may look like this. We may run up. We may get that beautiful bear trap on the way higher. We may take out all of these highs, right? Get some easy profit targets hit up there. And then all of a sudden now, right, the market collapses, right? It collapses. Why? Because we're way up around the highs, right? Nobody wants to buy high up there. Professionals won't. So now the market collapses, right? Is that a reversal? Probably not, right? Probably not reversal. Look at that pullback back there. Was that a reversal? Nah. It was just a bear trap and a great buying opportunity, right? Great buy the dip opportunity. Now, I don't know how far that pullback will go. All right, it may be a full reversal all the way back down. I do not know that much of the markets. I can't predict it. What I can tell you, though, is if we come back to the high of that trading range and we start seeing these bears, right, these rookie bears, these are not professionals right here. If you're going to short this thing, you're shorting that top. All right, and I'm going to talk about shorting that top. We'll talk about crown reversals, right, to short off that top. Don't you worry. There's a beautiful crown reversal today. I know a bunch of you guys nailed that crown reversal overnight. Well done that. We'll talk about that crown reversal here in a second, all right? But again, if you want to sell this market, you got to sell high. Right, you don't sell it as it goes lower. We sell as it goes higher, not lower. What we'll do now is around that prior range high, we trap those bears in. Let those rookies commit, right? Let those rookies wrap that rope right around their neck and use their stops to boing, right, and squeeze right back up to retest the high. And now, you know this already, right? If it squeezes higher, you know the way to get in as it goes higher, right? You know how to find that bear trap on the way where? On the way back up to take out that high and potentially that runner, right, up to that big pendulum swing I mentioned as we go higher up overhead, all right? I love this sequence right here. It's a bear trap as it rips higher, right? It is a breakout, basically a breakout pullback. It's a breakout pullback, but again, the entry technique we use is called a two-try failure. We don't pick the bottom, we trap the bears in and squeeze their stops, and again, a bear trap as we go back up to retest the high. Whenever we have range-bound markets, we trade failures in the pullbacks and traps as it rotates. Right? We talk a lot about this in our free video classes. And again, I have probably 100 examples of these types of patterns linked up in that free video course I mentioned before. All right, guys? Now, here's a good question, right? If we run higher, can I sell off that high? I definitely can. What's my problem, though? Momentum, right? That's a lot of momentum. Right? For all I know, it'll keep on going. Look back at this pattern. We talked about this last night, right? 24 hours ago, we talked about this pattern. I know a lot of you guys nailed this one today, so well done on that. What happens over here? We go up. The buyers try once to keep it going. Remember, we're a bull market, but we're way high right now, right? These are rookies buying up here. Right? This is not professional. Professionals are going to buy low, right? They buy low. They don't buy high. We run up, right? Aggressive rookies come in. They try to buy it once. They go lower. They buy it again. Look at that little crown reversal. I know this one's going to be messy here, right? But the key is it's that lower low in price, right? And that trap of that high. So we go up, right? We go up. And again, this may keep on going. We're an overall bull market. But if we start pulling back here right now, and we start seeing the buyers try to pull, right, to keep it going, right? No, I personally do not like the buy up there. That seems like a horrible place to be a buyer. But if they do come in and buy it once, and we go lower, now remember, buyers want to buy low, right? They buy once, they buy twice, right? We then get that bull trap above that high. Again, in the free video classes, you'll learn more about entry signals, right? The signal, of course, is to close below that moving average. All right. Remember how this looks. It's a lower low in price and a little move, just a little bit above that prior high right there. Nice strong red candle, closing firmly below that moving average, right? Just like over there. We go up, buyers once, buyers twice, above that high, strong red candle right there, closing below 20 moving average. That is your signal for that dump going lower. That is that crown reversal. There's no reason why we couldn't get a bear trap on the way up. Right? A bear trap on the way up. We go up. We trap in those rookies. 1, 2, crown reversal, which is basically a bull trap with a trap high. Right? It runs down, collapses down. It's probably not a reversal. It's a breakout pullback. We don't short that down there. We take our profit back there. We rope in those bears 1, 2, and we squeeze back up to retest the high. It's an overall bull market. So keep an eye on these 3 basic ideas, right? The bear trap going up, the crown reversal off the high, and one thing, keep in mind, right? Keep in mind, these crown reversals are counter trend trades, which means for a lot of people, these are half-size positions, they're quarter-size positions, right? Could be zero-size positions. If you're not making consistent money going with the trend right now, start there and then start picking tops, all right, in a bull market, all right? So some of us, we may want to stay away from those crown reversals. It's much easier to make money going with that long-term trend than trying to go against it, right? But I like to communicate those because for a lot of you guys, you've earned the right to take those big reversals. All right, guys? One more thing to be aware, and we'll wrap things up tonight. One more thing, an overall bull market, if we pop up and begin to grind and grind and grind, you know these, right? If it grinds, we don't force against it. All right. If it grinds, do not pick that top. Okay. There's a very big difference between pop up, 1, 2, back down, and pop up and grind. Okay. The minute this thing begins to grind, do not. I personally would never want to short a grinding market like that because those melt up markets. If you learn one thing the last few weeks, don't fight those melt up markets. Draw a trend line off the highs, bring it down to that low. And as always, we look left, we find some prior swings. I talk a lot about this in the free video course. My favorite entries when it pops up and grinds higher like that is get down around the low of that channel, try to get underneath one of these prior swing lows. This will almost always be underneath the moving average, which basically means we have the pick of the litter, right? We can either take the bear trap, right? We could take the failure off the moving average. We could take the pullback combination above the 21 EMA. I can't teach all of this right now, but again, I got a lot of examples of that stuff inside the free video course. One nice thing about pop and grinds is the pop leg is a measuring leg. So once we know how big the pop leg is, then we can pin it right there, and that will tell us how far that trade will likely go and let us leave the runner to make more money, right? The easiest way to make more money is don't trade more often. Simply get better at getting in low and holding on to your trades a bit longer. All right, guys? Those are my favorite trades for tomorrow. You know the markets, though, they're going to throw some curveballs tomorrow. It's not going to be as cut and dry as I'm talking about here tonight. I know my favorite game plan, but tomorrow we're going to get together and trade this stuff together because the markets are always full of some curveballs, aren't they? Now, don't forget, tomorrow morning, the best place to be is in our trade room, 8 o'clock Eastern time. We'll prep the charts overnight and trade our plan together. I'll put all the important links once again in the description of the video, the free class links. Definitely start there, the membership trade room links, and of course my Twitter feed, all the good stuff down below in the video tonight. If any questions, any concerns, any trouble getting access to our free video classes, just pick up the phone, call the office, shoot me an email, use live chat. I'm always here to help out if you need help along the way. All right, guys, thank you so much for watching all the way to the end. If you're still watching right now, you are the person I do these videos for. You are why I put all this effort in, so well done. I appreciate your dedication to watching these videos. Have a great rest of your evening. Hopefully I'll see you sometime soon trading with me in the morning trade room. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.